What can I write off on my taxes? Well, I'm going to start and say, what can't you write off? So that should intrigue you a lot. We're going to walk through 81,000 pages of tax code. We're going to get to a place where you're going to learn at the end of this video which credit cards you should be carrying around. Should you even carry a debit card around? And how do you activate making sure you track all this properly? So get a pen and paper. We have a lot to talk about. So 3 specific things I'm going to talk about. Really, I'm going to start with the 81,000 pages of tax code. What is it? How do you activate it? Number 2, what can you write off? Specifically, what can't you? There's about 8 to 10 things you cannot. So make sure you are ready for that conversation. And then the last one is how creative you can get when you really activate the tax code. Because tax, your strategy of what you want to do, and the law sometimes don't all get along. So how do you get really creative and stay in the letter of the law? So number 1, 81,000 pages of tax code. How do you activate it? Well, first of all, most people are scared to death of the IRS. Every April 15th, darn near every newspaper, media outlet has everyone, it's not just in America, but every country, be scared of the code. It's just so complicated. You just won't understand. Here's the truth about it. CPAs, when you actually use a proper tax strategist, I'm not even calling them just CPA or accountant, a proper tax strategist who knows the code, every one of them that puts their name on the line, their license for their CPA, like actual registration with the IRS, is on the line. So they take all the responsibility. So it's not about you being all scared and weird and 20, 30 years outdated of what's possible. 81,000 pages of tax code starts with how do you make the money? The money's made inside of a company. Then which company pays what bill? So let's just say that you're an individual and you have a job. Right? Say you're a firefighter, a nurse, right? You have a job, whatever you are, an engineer, and you have a side business, whatever that is. You're doing a consulting business. You're doing some sort of a real estate, construction business, rehab business, right? So now maybe you have 3 or 4 companies over here. So first of all, you activate better credit because you, in your sole proprietor business, which I don't want any sole proprietors, you operate your social security number, which gives you an activation of credit and credit score. Well, guess what? Every company that you have does the same thing. So why not use the entire financial system in the way that it's designed? Most of you stand back, you use TurboTax, H&R Block, some simple little software because you're scared of the IRS. I actually would say that this was my video saying, I love the IRS. Why? Because we have 81,000 pages of tax code. I've made money all over the world. We're the only country, the United States, where you make money, you can activate all the deductions, then you pay tax. There's most other countries you make money, even as a company, and you have some sort of GST, gross sales tax, that has to come off the top. You file taxes later to get it back, but there's money taken out. We are literally the only country that I'm aware of where you can make it, spend it, then pay tax. Hence why the United States has the code that it does. So what's in the 81,000? Well, everything. So most of our families, we encourage them to activate some businesses inside their family, whether it's the husband, the wife, the partner, whoever, and the children. They all make money. That means there's a lot in the household that can be written off. So for example, what can you write off? What can't you write off? Let's just say you bring clients to your house. I do. I have dinner parties. I had a New Year's Eve party. I have parties frequently. So isn't that party when guests that are clients come over a business deduction? Absolutely. So you're going to go through shopping lines, and this is where a lot of you behaviorally think this is too much work and can't be bothered. Well, then stay broke. Like, if you're not going to play the game, stay broke, stop complaining, because this is how I'm going to say the strategy is designed. You make money, you take all your legal deductions, whether that's dinner parties, let's say in the household structure. So let's just say you have a dinner party. Well, you personally don't need a housekeeper, but your company does because the house needs to be clean for your guest clients to come over. Your prospects call them. So if you're in insurance and you've been doing this, if you're in real estate, you've been doing this, whatever you're doing, if you operate out of your household, you can activate all of these kind of deductions. You can put in a home gym because you're an officer and director. You, again, don't need a landscaper. You don't need somebody to maintain your hot temperature pool. But again, if you have, guest clients over, all of that is deductible by the company. Now, is every TPA or every little software going to tell you to do that? No, they're not going to prompt you. You have to start leaning in and learning. use our teams. I have a huge tax team that we activate all of the code. When most of the kids are born in our community, they're employed immediately. They have Roth IRAs. They're structured properly. You're structured properly. We do your financial foundation as one of the first things. Where is the money going? It starts with your bank account. I want to speak a minute over to coaches, athletes, specifically athletes. Well, and even coaches get paid sponsorships with NIL money, name, image, and likeness. If that money goes into your personal bank account, all you're doing is amplifying a tax problem because you already are being paid as a high income earner employee. That NIL money or sponsor money should go into an entity. So if you're an athlete, a soon-to-be athlete, you are a parent of an athlete, you have a sponsorship as a company, like we've been sponsored many times by a variety of companies. Those are all income in and deductions to them or vice versa. Let's go to what you can't write off. So there's a part of your home and your rent you can't write off. Right? You've got to have somewhere to live as a human, as a person. That includes a percent of the utilities. That's a percent of the internet. It's a percent of the car. So there's a percent of what you use personally, which is why I encourage you to have one life, an integrated life, personal life and a professional life. And then you're working all together in one structure and your children are in that structure. So stop separating yourself with this personal and business life. Back to what you can't write off. Some food, some clothing, some, typical kid stuff. When you get to schooling, depending on your tax strategist, what else your company's doing, if your kids are going to school that are going to support the company and the company's initiative, companies can do 100% educational write-offs. That's $1 trillion tip. A lot of you do not use it. That's how I use it with my son when he went through college. Although he was on scholarship, our travel back and forth was business expense. Because yes, I went and saw my son play football and I went and had business meetings. He just came back and we had a couple of days of business meetings and we actually legitimately have meetings and they've all been documented. So there's a little bit of paperwork in this corporate life of writing off your life and activating 81,000 pages of code and tracking it properly. So do a little bit of paperwork or stay poor, but it's a choice. Now, before I go on and tell you a little more of my, call it ninja tricks on how do you spend, I call it forecasting because I don't like budgets, they're like diets, no one does them, so let's skip all that. Before I talk about how do you spend properly so you legitimize these deductions, I want you to subscribe to my channel, I want you to click the notification button, I want you to be here 5 days a week with you and your family and the people that are on this journey with you. All of you need business and financial literacy this year, like immediately. And if you're leaning back from a money conversation, it's not because you have a mindset issue with money. Your mind doesn't know anything about it, so it's scared. It needs knowledge. That's going to solve all of these mindset issues with money. So lean in, learn this year, go to askloral.com, always ask a question, make a request. Also, if there's a topic here on our YouTube channel that I don't talk about, go to the comment section and say, hey Laurel, would you please do a conversation about this? And we'll be back out once a month. We do a whole section of videos and we do look at your comments and what you want to say. If you really want to be super cool, share it. Yeah, like it, share it, and get a lot of people on this channel. Financial literacy and business literacy is so misunderstood and honestly just done wrong. And a lot of you, you're overpaying taxes. You're scared to even write off your home office. Like I have an operational company where we have an office with, say, 14 people that go to the office. But that doesn't mean my real estate company's there. My real estate company operates out of my home office. So we're going to help you organize and structure yourself. Do not go to a .com and try to figure this out by yourself. There's a whole legacy planning to this. This is going to pass on to your children or not. How do you really want to do this? And as far as spending, put your debit cards away. That takes money right out of your bank account. Credit cards done right are investment cards. So you could have a personal card, your own credit card, and then you'd have company cards. And depending on which deduction is which card you use, it's easier for your bookkeepers to track. It's easy to track deductions. And remember, once it all rolls down, your companies pay tax in September, you pay tax in October. That's how this is going to go. There's no more April 15th. That's all for the sheepology of the world. So if you're here and you're on my channel and you're watching the channel, not just subscribe, watch it every day, you're going to start changing your behavior this year. And the biggest one is put an extension in. Your company will file taxes in September. You personally file in October. And you then pay the little bit that's due instead of, oh my gosh, I can't wait for my $2,000 or $3,000 return. If you're getting a return back, a big one, like year after year in January, you didn't even do the whole year right. So let's fix this year. So 2023 is when we're recording this, can be a very different year for you. So again, ask any question. A membership called Ask Laurel. Go to askloral.com, ask a question, make a request, and say, I would like to talk to somebody about paying lower taxes immediately in the company, and we'll move you right through the system and right onto maybe even a phone call with me. We'll talk tomorrow.